Now, because I've been long-term investing, building up my personal dividend growth portfolio for around 7 or 8 years now, I love to make videos and share with you guys some of my favorite tools and or resources, especially when it comes to helping you build out your portfolio long-term. And this is honestly for a few simple reasons. For one, I actually use a lot of these tools on a consistent basis, but for two, I wish I in the early days could have came across videos like this and learned about some of these free resources a lot sooner, because I can only imagine how much that would have helped me in my early days. But in this video, we're going to talk about how exactly to use a dividend calculator. This one is absolutely free online. I'm going to share with you the resource and walk you through exactly how to use this. We're going to talk about the power of compounding and exactly why I think the dividend calculator is one of the most important tools to mess around with, especially in your early days of investing, just to allow yourself to see what your portfolio could turn into long term. So if you're currently a long-term dividend growth investor like myself, make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. Now, before we go over the dividend calculator and I show you exactly how it works and why I think it's so important, especially in your early days of investing, let's talk a little bit about what the dividend calculator is really going to show us. It's going to show you the power of compound interest over time, which is interest that applies to not only the initial principal of an investment or loan, but also the accumulated interest from previous periods. In other words, compound interest involves earning and owing interest on your interest. The power of compound interest helps a sum of money grow faster than if it was just simple interest calculated on the principal alone. And the greater the number of compounding periods, the greater the compound interest growth will be. For savings and investment, compound interest is your friend, as it multiplies your money at an accelerated rate. Which is exactly what I'm going to show you firsthand. When it comes to a dividend calculator, you are going to see the power of compound interest firsthand. Now, to dig into how compound interest actually works, compound interest is calculated by multiplying the initial principal amount by 1 plus the annual interest rate raised to the number of compound periods minus 1. The total initial principal, or the amount of the loan, is then subtracted from the resulting value. Now, for a few examples of this, let's say you start saving $100 a month at age 20. You earn an average of 4% annually, compounded monthly across 40 years. You would earn $151,550 by the age 65. Your principal investment was just $54,000 though. Now, in the same token, your twin doesn't begin investing until they're age 50. They invest $5,000 initially, then $500 monthly for 15 years, also averaging a monthly compound return of 4%, but by age 65, your twin has only earned $132,000 plus with the principal investment of $95,000. So basically, the sooner you get investing, even if you don't have all that much to invest with, it's going to make a dramatic difference long term. Which is exactly what we're going to see inside the dividend calculator. There's a lot of free ones across the internet. You can literally just Google dividend calculator for free. That's one's on marketbeat.com. No, I'm not sponsored by them. I don't own this or anything. This is just one of the ones I like and use often. But they pretty much all do the same exact thing. So for this dividend calculator, you can basically type in any stock or ETF, or you can look into some of the metrics that whatever stock or ETF is offering and input that data yourself. So going through all the different options, it says portfolio or individual stocks. So we're going to click on portfolio. Distribution frequency, this is going to be how often interest or dividends are going to be paid out. And this is of course going to vary from monthly to quarterly to semi-annually. But most of the time, most stocks and ETFs across the market pay out dividends or distributions quarterly. Then DRIP can be turned on or off. DRIP stands for Dividend Reinvestment. Now DRIP basically means you're going to be reinvesting your dividends or reinvesting all the distributions ongoingly back into the portfolio, which of course you can use yes or no. Now, the starting principle is going to be how much money you're starting off as far as your portfolio from day one. So if you're starting a portfolio, let's say with $10,000 invested into, for this video's example, let's use the SCHD ETF because I know all those stats off the top of my head. A $10,000 starting principal in SCHD, a $12,000 on top of the annual contribution. And again, you can mess around with these, change around the numbers. I definitely recommend you guys do so. And this is because years back, I started messing around with these dividend calculators a lot more, and it really painted a picture of what my portfolio could actually turn into long term and made me extremely motivated. So annual contribution is $12,000, starting principal is $10,000, DRIP is turned on, which means we are going to be reinvesting our dividends. The distribution frequency is quarterly, it is a portfolio. The dividend tax rate is 15%. Again, you can change this to whatever you want. Tax exempt dividend income is going to be 0. Because we're talking about SCHD for this video's example, just as a real quick example, 3.5% initial annual dividend yield, 9% annual dividend amount increase, which again could go up or down. The expected annual share price appreciation, let's go with 3%. In years invested, you could of course change this to 10 years, to 20 years, to 30 years. Because I'm currently 31 years old, let's do 29 years to see what I would have by the time I'm 60. So what's pretty cool then is you can go through and see every single year based off of the numbers that you input it. And again, this is going to change depending on if you're investing into specific stocks or ETFs, or maybe you have a mix of different stocks or ETFs, but either way, it gives you a nice estimation of what things could look like down the road. So it shows you year number one, your $10,000 principal is going to earn you roughly $354 in dividends. The yield currently is going to be 3.5%. Your yield on cost is going to be 3.55%. Your after drip value after the taxes are going to be $10,300. Your principal increase will be $300. Your annual contribution will be $12,000. Your new balance after that massive annual contribution will be $22,601, which brings us into year number two. As you can see, already the portfolio in theory, of course, would be over $22,000 with over $848 per year in dividends, and so on and so forth. And you can see that later down the line, the portfolio would grow significantly, especially if, of course, you are willing to contribute a significant amount of money and reinvest the dividends along the way. After 29 years, in theory, just going off of these numbers, a portfolio that started off with $10,000 and $12,000 added on top of that per year would now be worth $2.265 million and earn upwards of $400,000 per year in dividends. Now, before you say, well, that's absolutely insane, there's absolutely no way that's going to be possible, we of course don't know exactly what's going to happen in the future, etc. But just going off the numbers that we input, you could of course make them much more conservative. You could turn this 9 into a 4, and obviously things are going to change much more. For example, if we go with a 4% dividend growth rate, now after 29 years, we only have $960,000 and around $44,000 per year in dividends. So of course you can mess around with different amounts of starting principal, different annual contributions, and sort of decide whether or not the current metrics different stocks or ETFs are offering are likely to happen in the future. But either way, especially in your earlier days of investing, this is a super awesome free tool to use to mess around with and to just dream about what the future could look like, maybe say 10, 20, 30 years down the line. And this is mostly because dividend investing is a long-term investment strategy. None of us are trying to get rich quick with dividend investing, especially if you're still watching this video at this point. You probably are serious about growing your portfolio and you want to do so in a very smart way. And that's awesome. That's exactly what I'm trying to do too in my portfolio. But just because dividend investing is not a get rich quick scheme by any means, it doesn't mean that investors that stay the course long-term, invest in high-quality dividend-paying stocks and ETFs, and keep adding to their portfolio long-term can't get filthy rich also. So now that we talked about the power of compound interest, and I literally showed you multiple different examples of how the power of compound interest works long term. By investing into something and getting paid more and more over time, reinvesting that back into the initial investment, it can create quite a portfolio long term into the future. And of course, we also went over exactly how to use step by step this dividend calculator, which is absolutely free. I want to lastly hear from you guys down below. For those of you watching that are currently dividend investors, I want to know at what age do you hope to retire completely off of dividend income in the future? Drop it in the comments down below. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.